What is the best trading style and how do you find the perfect trading style for yourself? Hello, welcome back. And I made a very popular video a while back where I talked about different trading styles, and I want to continue and provide more tips because I see that this is a big issue and I want to help you find the right trading style for yourself and just raise awareness of what trading styles there are. So when you talk to a trader who doesn't know too much or who is quite new, then they believe they only have three options. They believe there is trend following trading, then there is reversal trading or counter trend, whatever you want to call it. And then obviously also people believe there's range trading. And most people believe that this is all there is and they need to choose between the three. But what is it really that they are doing once they choose this and what they believe that each trading style represents? So when we take a look at trend following trading, what people believe there is that you have a previous trend and then you have a new trend and that's it. And what trend traders do and what trend traders believe they need to do is they try to capture the something in between, because obviously you need to wait to find a trend to start following it. So the trend traders, they try to get something from, just the meat in the middle. They don't try to pick the absolute top. They don't try to pick the absolute bottom. They try to get the safe stuff in between. But obviously, this is usually not what happens with trend trading, with trend following trading, because what happens is that traders try to pick the bottom, traders try to pick the top, because they very often miss the part in the middle. Then they are frustrated. And trend following trading, for me personally, it never really worked out in the classic sense. And I will get to that in a later point of this video to tell you a bit of a better approach. So trend following trading is usually trying to focus on an existing trend, then you try to jump on board and you try to catch something in between. When it comes to reversal trading, what happens is that when you look at a market, you have an uptrend and you have a downtrend. The trend reversal traders or counter trend traders, what they are trying to do is they're trying to pinpoint the absolute turning points. They're looking at the turning points here, and then they hope the market will go up. Or when the market is going down, they try to pinpoint the absolute low when they believe the market is going up. And obviously the rationale is that if you can pinpoint the turning point, you will be very early on in the market and your profit potential is the highest. However, what usually happens is that if the market is going up and you want to find a new downtrend, what is usually happening is that the traders, they start selling here, they start selling here, they start selling here, they start selling here, and they have a huge loss when the market keeps on going. And then they usually exit their trade at, usually, as you probably know, the worst time possible. Here's when they're fed up. They believe, okay, this trend is never going to reverse. Let me cut my short opportunity, more short trade, and then the market resumes or reverses without them. They're very frustrated. And then what they're going to do, they are buying here, they're buying here, they're buying here, they're buying here, because they believe, wow, this downtrend has been going on for so long, it must reverse. However, then they're sitting on an unrealized loss. Where are they going to close the loss? Somewhere down here, because the pain is just too big. They can't stand it anymore. And then they're going to miss this. And this is what repeats time and time again when you are doing reversal and counter trend trading. When it gets to range trading, what is happening here is that you usually have ranges like this. People look for well-defined support and resistance levels, and then they try to trade in between. This is usually what people think of range trading. So they want to nail, the turning points. Let me mark that. So ideally you want to get in here, you want to get in here, you want to get in here and here. However, the same problems with reversal trading happens is that it is impossible to pinpoint the absolute turning points. So you will either get in way too early or you will get in too late. And then obviously another problem in trading is that it's very hard to hold on to winning trades, and many traders tend to cut their winners too early. So they will cut their winners way too soon. So they only realize a very small profit. So they are fighting for this profit, and they have all this uncertainty around it. They're trying to catch the top, but they're usually too early or too late, and then they exit their trade way too early. They miss the good chunk of the profits, and then again the same problem repeats itself. They cannot pinpoint the absolute turning point. They get in way too early or way too late, and then they just fight for very small chunks in between and miss everything else. So this is what generally traders make the mistake when it comes to choosing a trading style. They believe that there are only options like trend following, reversal, and range trading. And this is usually how amateur traders approach it. So trend following, they try to capture the safe part in between trends and in trending phases. However, usually people are way too early, or people are usually way too late. And then also they exit their trades usually too early. So they are not getting the optimal out of their trades. When we look at a general trading market, and when we look at market phases, this is usually, although this is a little bit idealized, obviously, this is usually the market phases that a market will go through. And this is very common. We will take a look at a few real charts in a moment, but this is just, this is very nice to observe. And you will find those patterns and those phases in the real market as well. So what do you have? We have here a range market. Then you have here at this point, you have your breakout point. Together, then often what happens is you have a pullback into the breakout point. Then you have a very early trend when the breakout succeeds. So actually, let me make this a little bit nicer so we can follow it later on. So you can see that we have our range here at the bottom. The breakout happens here when the market is actually breaking out of the range. You have a pullback, then you have your early trend. Then you have usually small ranges, or you can call them consolidations, followed by more breakouts when the range is exited. Then here you have regular trends when they are where I keep it going. Then here you have mature trends. Once again, what happens is that you have your breakout and your range, and you will see that breakout and ranges are usually the connecting parts between trending phases. Then once a mature trend is slowly losing steam, you'll find exhaustion, which then leads to a range here at the top. And then again, the same repeats itself over and over again. Once the market exhausts, here at this point, you're going to have a breakout. Then we have our pullback once again here when the market pulls back into the breakout area. Then you have your continuation, your early trend, your medium trend, and your mature trend. And you will always find that the market repeats those cycles time and time again. It's very timeless, and whether you look at Forex, indices, commodities, whatever market you look at, you will find those phases. And so instead of limiting yourself to those very limiting and limited approaches of just believing that you need to be a trend following trader, a reversal, or a range trader, I think it is much more helpful that you pick one of those phases here, that you look at a market and trading styles in terms of those in those phrases and those concepts. And then you can build a much more robust trading approach. So for me, for example, what I trade is breakouts, pullbacks I have added lately. Let me make this a little bit cleaner. So I'm trading breakouts as my main strategy together with pullbacks and very early trends. So you can see this is where I am specializing. I'm not interested in ranges at all. I stay away from ranges. I stay away from mature trends, not here. And I don't also trade once a trend has already started. I'm not entering anymore here. I'm not entering into medium trends. I'm not getting into breakouts once the trend is progressing, but then again I get interested once the market enters such a phase: exhaustion, a range, a breakout, and a pullback. And you could even argue that trend trading, in the end, this is real trend trading, because you don't want to predict a new trend. You want to anticipate once the market gives you certain signals. Once a previous market is exhausting and once a previous market is losing momentum, you start paying attention to such a market, because at one point it may or may not break out and give you signals that a new trend is underway. Or once, if you don't like to trade the breakouts, you could wait for the breakout to be over and you wait for the market to pull back into the previous area. And this is what you can specialize in. However, obviously, this is not the only thing that you could do. You could always obviously also choose another thing, because every trader is a little bit different. So maybe you enjoy trading medium-term trends, or you are specializing in range and breakouts once a trend is already on its way. You don't like to get in here in the early or the late stages. You like to get in the middle of the range or in the middle of the trend, and then you specialize in a breakout or as a range trader. And this is then what you could do. And breakout trading is what I think is usually what is suited for many beginning traders, because breakouts, they are really the connecting concepts between different trending legs, or between new and late trends. And breakouts are usually at the core and at the origin of big moves. So just specializing in one of those concepts can really make a big difference, because then you can really nail it down, and then you can really define, okay, what type of trader do you want to be? And I started out exclusively being an exhaustion trader together with breakouts. That's what I did for over a decade. Just lately, I added pullbacks to my repertoire, but you can trade very nicely just focusing on exhaustions and ranges and breakouts. And when we take a look at the live markets, then you will find those concepts over and over again, and then you can build a trading strategy around it. You can ask yourself, okay, what are the tools that I need to use then for my trading? So here you can see it very nicely. Let's take a look at this market here. It's the Aussie yen. It works on all the time frames in all the markets. So you can see here the market was in an uptrend, and then here at this point the uptrend then was over. Once the market here is not able to make higher highs anymore, you have a nice top pattern here, which is your range and your exhaustion from what we talked about previously, exhaustion, range, and then the only thing that you need to do is wait for the breakout. The breakout happened here. If you go to the lower time frame, you will even see that you have an immediate retest and immediate pullback here, and then you have your early trend, you have a pullback, you have your mature trend and a pullback and a range within the mature trend. Then here, as the trend progresses, you have here your final exhaustion, and this is a spike exhaustion and what I did for a long time is that I was trading those spike exhaustions with the help of a Bollinger Band set to 2.5. And because I wanted to trade, I was very clear on what type of market I want to trade. I wanted to trade exhaustions and reversals of exhausting trends that resume into a new trend. So I knew, okay, what are the tools I need to pick? And one of the tools was the Bollinger Bands. Another tool is the RSI here, for example, on the top. This is not a classic divergence, but later on, when we take a look at another market, or even here on the right-hand side, you can see that here we have a slight divergence, and the trend also looks like it's ready to maybe turn around. You have here your previous trend. It looks like it is exhausting here. You could even draw your support level like this, and now it may already look like the market is here breaking out into a new trending phase. So we would be somewhere in here. We have the exhaustion with our RSI divergence. We have a breakout already, and now you would wait for the pullback if you want to trade pullbacks, or you would already be in this one if you are a breakout trader. And the same happens here at the bottom. You have quite a nice breakout area here defined after the spike. and then you could get into the new trend. If you want to trade this phase here at the bottom, a range with a spike, and then you trade the breakouts here out of this one. The same here with the US dollar yen. Very, very similar, obviously. And we also have the same exhaustion here on the right hand side with the divergence. So if you say, okay, I want to trade divergences and I want to trade exhaustions, what is the right tool? So this is then the next step that you could ask yourself. Okay, once you say, I want to trade, and let's get rid of this for now. So let's assume that, and this is how I started in the beginning, I want to trade those types of markets, breakouts and ranges, exhaustion and ranges and breakouts. And then ask myself, okay, what are the tools that I can use for those things? And once you are clear about which of those different market phases you trade, you can pin it down and really boil it down to what are the tools that really make sense in this context. So it could be divergences, and you can use any momentum indicator. You could also use MA crossovers, or you could use Bollinger Bands for a spike, and you could also use horizontal support and resistance levels for breakouts, for example. You could use, which I did for years, is trendline breakouts as well. And then those are the tools that you could use. You are very clear about what is the market that you want to trade, what are the characteristics that you need to observe, and which of the tools make sense in this context. So here we have your divergence or a divergence, then here we have a trend line, and now we would only need to wait, okay, when is the market here really breaking out? Do you want to trade a pullback into the trend line, or do you want to trade the breakout directly? And the same thing happened here at the bottom. You have your failed breakout to the downside, you have your Bollinger Band spike, you have a very well-defined resistance level that is broken and retested here after the market has exhausted here. How did it exhaust? Also with a divergence. So you can see here that after this trend, everything is coming into place. And this is the beauty of it. Once you are clear about which of the phases you want to trade, then you just can let price come to you instead of chasing price. So once I was clear that I want to trade exhaustions and breakouts, I knew that I didn't have any business of trading trading trends. So this was a very big relief actually, because before that I was always a little bit worried, and I was always fearing and feeling that I was missing out, and FOMO was kicking in because I was seeing that the market was moving in such a big way, and there was a big trend that lasted for a long time, and I was not trading it. And so I felt naturally that I was missing out. But once I was clear that this is not my edge, this is not what I'm going to trade, I started to be okay with that, because I knew that once the market enters an exhaustion phase, that's when I start getting interested in the market, and then that's where my edge is. And then many amateur traders are all over the place, but once you are very clear about the trading style that you want to choose for yourself, then you can trade it with confidence and very, very targetedly. So if the market is here ongoing and the trend is here moving along, if I'm not in the trade and if I'm not in this market, I will just look at it and wait until I see clear signs that the time is coming for me when the exhaustion is happening. And I let the trend traders who are getting into this market earlier than me and at different stages, I let them have their part. And then once they are withdrawing, then my part is coming. So this is a much, much more professional way of just picking the trading strategies and trading styles that fit your way of thinking. You can very nicely use and you can very nicely and very targetedly pick the tools that make sense in this approach for you. And then finally, for the first time for many traders actually realize what they are actually doing. Many amateur traders, they are all over the place, and they just try to catch every market move. But once you are very clear of where you want to specialize in, then you can make better decisions, you can trade more confidently, you can also trade calmer, you don't have to be stressed out all the time because you think that you're missing out, because you know exactly when you need to get involved and when you have no business in getting into the markets. So I hope you use this video of asking yourself, where do you want to get in? What is the market style that makes sense to you? Early trends, mature trends, breakouts, and then ask yourself, okay, how do you trade those? Do you maybe, if you want to trade the ranges, let me clear this up a little bit. So if you, for example, then come to a different conclusion, maybe you want to trade here early, not the most early trends, but once the trend is on its way, you want to look for those parts here and you want to capture the next leg. So for example, you could go to a lower time frame, try to identify the ranges here, and then with the help of range patterns, support and resistance and trend lines, and for example, a trend strength indicator, the ADX, once it is broken out on the lower time frames, you would start looking for trend following entries. Also totally fine. It is only very important that you make a conscious decision, that you are very clear about what type of trader you want to be, that you need to really focus down and focus on one particular trading style in the beginning, and then slowly start building your expertise around it. And I really hope you enjoyed this video. I hope it did make sense. If it did, make sure to give me a thumbs up. Also, subscribe to my channel. I'm regularly doing live YouTube streams, and if you want to get notified about them, you need to be subscribed to my channel. Also turn on the notifications, and then once I go live and once we talk about charts and we do live Q&As, you will be able to join me and just hang out with me. Until then, happy trading.